And there it is. The markets are officially closed on this Wednesday, January 28th. Welcome, investors and traders. I'm AJ Monte, and this is the midweek live report. Before we bring on Nod, let me just say I told everyone to fasten their seatbelts even before 2025 ended. And I was referring to the silver markets. We're going to talk quite a bit about silver and what's happening here, not just with the physical metal, but with what's happening with some of the ETFs, particularly SLV. So, as usual, we have Nod from our Nod Live news feed. He provides our members with nonstop news headlines 24/7. And we had a great team meeting today with the StickyTrade crew, and we're just going to continue to accelerate our growth and to help improve as much as we can on any of the offerings and services that we provide. And I hope for all you members out there, you're having a great time, because 2026 is already turning out to be the best year we've had in years, and we're not even through January yet. So, Nod, what do you have as far as headlines, and what could you share with the audience today? Go right
AJ,
ahead.
my data cup runneth over. I'm so glad to be here. And again, as always, we thank everyone who's here. Without all of you, none of this can happen. So thanks so much. So seatbelts on. Today was an extra special day. You listen, the Fed kept rates on hold, and gold continued to run to a record high of nearly $300. It rose $300 an ounce.
Hold on. That's the dogs of the Dow. That's the dogs of the Dow, right?
So sorry about that. So gold's up nearly 18% over the last 7 sessions on Fed uncertainty. Silver is up over 11% near record highs. Sorry about that. So the S&P hit $7,000 or 7,000, a record high, which for the first time, and it pulled back at the close. Sorry about that. Tether now holds 140 tons of gold, or $23 billion worth, of the largest known non-sovereign, and it's being held inside a nuclear bunker. But really, AJ, the story is the Fed and what it did to the dollar. So what I want to talk about first is pull up this chart here on the U.S. dollar. AJ, the U.S. dollar is at a 4-year low, down 16% from its peak in September 22nd, September 2022. So let's kick things off with the dollar and its impact on precious metals and equities.
Well, let's talk about the dollar. That's right. Now, for those members who have been tracking the charts that we put out, particularly with the US dollar, it's $DXY. I want to back out here for a moment and look at the monthly chart, because we have some projections here based on conventional technical analysis and how to analyze price channels. Now, since 2011, now I'm going back all the way to the bottom of the chart here. Hopefully you could see my cursor right there. From 2011, we've seen higher lows consistently, which makes this bottom line the trend line. See that? Now, in a channel, what usually happens is the trend line will hold, and then the market or the price action reaches a level of resistance in an area that's more or less parallel to the trend line. So that's how we draw the channel line. So again, the bottom is the trend line. The upper parallel line is going to be the channel line. I'm just abbreviating here, CL for channel line. Now, once the channel breaks, and it doesn't matter if it breaks to the upside or the downside, you basically take the width of the channel, and whatever that number is or whatever that price range is, you then attach it to the breakout point of the channel. And so we're now trading at a level below the trend line. And therefore, if the dollar continues to get pounced on a global level, it's showing much greater signs of weakness than it did even last month. You could see the dollar way down here, which would be much closer to the support levels that we have in 2013 and 2014. Now, you might argue, well, a weaker dollar is most likely going to help our exports. And you'd be right in saying that, because when the dollar gets cheaper, the buying power of other countries allows them to buy our products at a much cheaper level, right? It was back years ago when I was in high school. You could go on vacation in Mexico for a whole month for like $30. No kidding, because the peso was so devalued at the time. That's what I'm getting at here. But the downside to that is U.S. consumers and U.S. citizens now are caught in an inflationary move that's going to hurt them with regard to buying product outside of the US, right? Now, remember, the tariff debate still continues. So a weakened dollar, again, it helps US companies that are exporting, but it's definitely going to hurt the US consumers. So what does that mean in terms of the stock market? Well, when you have an inflationary condition, let me go to the diamonds here. I'm going to put DIA. You see, we're obviously in a raging bull market here, right? Now, Peter Schiff did a great job explaining what happens to the U.S. markets when the dollar gets deflated. You're getting product, you're getting shares that are appreciating, but they're appreciating in a devalued dollar translation. You see, so we're still seeing upward moves, but you're not being hedged against inflation. That's not real value. That's not real appreciation. So that's why the silver argument and gold argument is so strong right now, because that's one of the reasons the dollar is so depressed, is because the global market is not buying US dollars. They're buying gold and they're buying silver instead. And even Saudi Arabia, NOD, earlier this week announced that they were going to earmark basically $100 billion
$1 billion, right?
profits from oil and minerals into buying silver. Now, yeah, we're now used to hearing trillions of dollars. So if you need the translation on that, that's a tenth of $1 trillion now going into the silver market. And
Right.
not with that, I can't help but look at the silver futures. Here,
Yeah.
look, this is what we were looking at. Looking at the intraday or daily chart right here. Today's high was 117.60. So for our members, especially, I made a call earlier in the year or the beginning of the year where I said, once silver breaks out over 100, which it obviously has, it'll quickly go to 120. And that's not just with silver, it's with any stock. So we're on our way to 120. At 120, I think you'll see a little bit of selling, but not heavy resistance. I think you'll see a consolidation pattern, maybe sideways, very short-term channel. And then, folks, put on those seatbelts again, because I think we're going to the moon on this. And I even put a little thumbnail together for today's presentation. This is the pressure cooker that I'm referring to here. My 18-month target on silver, just for the record now, 18 months from today, is $300 an ounce. And I even think I'm being conservative on that forecast, because the pressure cooker that represents the silver market here in that little image is basically the exchanges and the global banks that have been trying to keep a lid on the price of silver, manipulating it and controlling it. And they're not able to keep that lid on any longer. So what's happening is the silver and gold markets are seeking out their true levels of valuation. And I think it's way, way undervalued even at these levels. So again, fasten your seatbelts. We're going for a ride for sure.
Well,
Definitely.
speaking of seatbelts, AJ, you've been very clear that you've rolled from SLV to PSLV, but I want to pull this up because we had something major happen in SLV on Monday, which is the world's largest silver ETF fund. So I'm putting this on the stage now. It traded $38 billion in total value, or almost 400 million shares. That was their largest value traded. And I know, like I said, you're a PSLV guy, AJ, but we also got some news today with regards to what they're going to do with some of the options. You talked about an explosive growth and a pressure cooker with regards to silver, but what does all of this mean moving forward for maybe those that are not on the sidelines or those that want to dip their toe? Is there still some upside, and what can you explain what today's news means with regards to a catalyst to the upside?
Well, as you know, Nod, we cannot give trading advice or investing advice. I can only tell you what I'm doing or what I've done,
Right.
and I make that very transparent. So for those who are following me on X through the AJ SLV trades, hashtag AJ SLV trades, I told the audience that I was moving out of SLV, mainly because I just didn't trust JP Morgan as being the custodian for that fund. And, going back, you don't take my word on this. You can even use some of the AI programs out there to find your answers very quickly. Go back and research the number of fines JP Morgan has had to pay over the years in the billions of dollars for manipulating silver. All right. Now, they, I think, are playing the yield to jail ratio, because you'll notice that some of their executives actually went to prison for 3 years for the manipulation of silver. And they, fortunately for them, and not so fortunate for those who have been manipulated, but fortunately for them, their retirement accounts are still intact by JP Morgan. So the yield to jail ratio is, hey, you know what? If I go to prison for 3 years, but I come out with a multi-million-dollar retirement for the rest of my life, I think I'll go do the time to get the reward. And that's actually what happened. That's the truth. And so they're no longer able to keep the lid on, like I said. And I really don't even know, nor will anyone know, what JP Morgan is actually holding in silver, whether it be still a short position they have to cover, or are they actually going long and sticking the rest of the banks in the back from taking a position against them. But my reasoning for moving out of SLV is because I think it was becoming very unstable due to the fact that there wasn't enough silver to back their valuations. And that's what we're seeing. So eventually, I think you're going to see SLV go bye-bye. I think it's going to come off the board. They'll settle their final trades in cash. And I do think, and I know this is a long stretch in predicting this, I do think COMEX is going to be in a lot of hot water when they can't deliver the physical silver any longer. And they too have to settle in cash. Now, in the contracts that you buy for silver, meaning the futures contracts, there is a clause in there that's in many contracts called force majeure. That releases the exchange from any liability in the event of a natural disaster or something that's out of their control, right? So that holds them accountable to settling in cash, but it doesn't keep them in a liability that's going to cost them, the members of the exchange a fortune in settling. So my strategy was to move out of SLV and take the cash and move into PSLV. And I'll put PSLV up here in an attempt to get into the Sprott physical silver, which is represented here. Every share represents 0.34 ounces of physical silver that is held and secured by the Royal Canadian Mint, and everything is documented and made public. So every 3 shares you own of PSLV is equivalent to 1 ounce of physical silver, and you'll see how that moves very nicely in tandem with the price of silver. And then what happens is I trade in and out of some of the silver miners, and particularly AG. I like AG for trading, and I think that could easily double. Don't hold me to that, but I think AG, being a mining stock, trading 26, I think that could easily get to 52 or higher. And so I trade in and out of that based on the technical signals. And, for the longest time, and I'm talking almost 17 years, I've been trading in and out of SLV, accumulating a very large position. And it wasn't until recently, until last year, actually, when I started moving out of SLV to protect myself and move into something that's more related to physical metal. So this is truly going to be the headline, I think, at least for the next 6 months. On Friday, Lindell TV has asked me to come back to do an interview regarding silver. I'll try to keep the politics out of that one if I can. But I want the world to know that there's something about to happen, and what's going to happen is going to be explosive. It's not going to be just a gradual rally. I think we're going to see something explosive, not just in the silver markets, but I think you're going to see big news coming out of the exchanges, big news coming out of the economy, the Fed. Crypto market's going to be on fire, so stay tuned to our Cryptex team. Matt and CJ do broadcasts every week on what's going to happen. So everything is going to be moving and being shaken up. So I'm very excited about 2026. And I think our members are very, very happy. We're getting a lot of feedback, as you know, Nod,
Yeah.
of their success, and it just keeps coming in for sure.
Well, you said moving and shaking, which brings me to gold. If I can pull up this chart here, so gold's beaten the Nasdaq 100 by 60 percentage points over the last year. Which the only time it's done this, AJ, was in 2006 and 2008, which led up to the financial crisis. So over the next year, gold went on to lag the QQQ. So AJ, with the masses trying to maneuver this, and with the Qs being a decent correlation to gold, I know this is a bit of a noisy chart. It gives some context. So with regards to history, where are you with regards to gold and all this? We've spent a lot of time in silver, but with gold now becoming an investment vehicle for many, and with rates seemingly being on hold and likely going down, and with everything you said about the dollar, where are you with regards to gold?
Well, I'm not trading gold, nor am I trading any of the gold ETFs. I'm not telling anyone they shouldn't. I'm just not. I'd rather buy the physical and hold it and not ever sell it. But that's my strategy for beating inflation. I think gold is always going to be the standard by which we gauge the precious metals as a whole. Now, right now, if you look at the gold silver ratio, and it's important that you look at this, is that, let me pull up GC as the gold futures continue to trade here. Gold right now is trading for just a little bit over $5,400 an ounce. Today it hit another record high that it has been for the past month, week after week, just making new highs. But the gold silver ratio as of today is about 45-1, which means that for every ounce of gold that you own, you could buy 45 ounces of silver. Now, if you do simple math, and let's play this out because I think this is a real strong calculation with projections. The historic gold silver ratio is between 20 and 30. Okay, so if gold gets to 6,000, which I would believe will happen in the near future, and I agree with Peter Schiff on this one as well, is that if gold gets to 6,000 and the gold silver ratio drops from 45 to 30, right now that puts silver on a level of $200 an ounce. That's just going back to a 30-1 gold silver ratio. So while I can't give any guarantees, I believe there's a high probability we're going to see $200 an ounce silver very, very soon. And I think that my $300 an ounce is not a far stretch. Now, remember what I said before, the $300 an ounce silver is not going to happen overnight. I think that's over an 18-month period, maybe a little bit longer. Again, don't hold me to the time frame, but I just see nothing but opportunity here. And that's how I'm using gold, more as an indicator for how I'm going to position or trade the silver markets. Yeah.
I like it. Thank you. So a lot of people, they've seen the gold move, they've seen the silver move, and they want to catch the next one. And a lot of people are pinning towards copper. You and I have talked about this before. We've touched on FCX. We know it's a base metal, but I want to pull up a chart with regards to consumer confidence, because consumer confidence is at its lowest level in more than a decade. So a measure of expectation over the next 6 months take us to some of the lowest levels we can forecast out in nearly 5 years. So AJ, with people asking about copper and looking for their next play, we've talked about FCX, but what do you think about the ETF COPP and any other opportunities, please?
Well, if you're looking at COPT, excuse me, I put in the wrong symbol. COPP, COPT, right?
Yep.
That's not it. See, I don't trade this one, so obviously we got a bad symbol there. What's that again? Give it to me in for next. Go ahead.
COPP.
COPT.
PP.
Not
Peter.
Oh, thank you. All right. So now I'm not trading this, but you have to understand copper and silver are both on the rare minerals list, right? Or critical metals list. And you can trade it, but I'm not as excited about copper as I am with silver, because over the years they have not been trying to keep a lid on the copper. Now, silver is a byproduct of the copper mining process. And while I still think it's a good, secure investment, I'm not trading it, but that's not to say you can't trade it. The good thing is that if you look at this ETF, they do have options that could trade. They're not very efficient, but for those that like to trade the wheel, which we've been talking quite a bit about this week, especially, the wheel is when you're selling cash secured puts with the attempt or agreement to buy it at the lower levels. And if you get put the metal or the ETF, then you turn right around and you sell calls against it. So it's a very comfortable way. And by the way, if you've never traded options in your life, come over to StickyTrades. We've got a good educational course for you to learn how to do that. But again, I think you're going to see, I would play it all from the long side. If you look at FCX, looks a little overbought right now, especially on the weekly chart. I would not be buying that at all, but I would be a buyer down around the 55 level if you get any kind of a pullback there on FCX. And here's another one you could trade. You could use trading the wheel for sure. Yeah, we got a lot of comments coming in that chat. We got any ticker symbols that
we do. So for those that are new joining us, every Wednesday, AJ fields and forecasts 50 of your tickers live on our rapid fire at 6 p.m. Eastern. So we've got a bunch coming in now. AJ, this is going to catch us both off guard, but Tesla reported after the bell. I have no idea what it's doing, and neither do you. But given that it's moving in the after hours, can you give us your latest take, please?
Well, Tesla's already hit my upside target here at 442. It's up a little bit right now. It's trading around 443 in the after hours. And I'm not trading Tesla, but I know a lot of our members are trading it. This would be a great candidate for those, again, who like to trade calendar spreads. There's enough premium in the underlying options for you to be able to trade some nice diagonal spreads. But right now, if you look at Tesla, it's in more or less a trading channel all by itself. I mean, here, going all the way back to April, here's your trend line right there. If I draw a line parallel to that, connecting the highs, there's your channel. You see, so it's at the bottom of the trend line here. You might get a little bit of a move up, but you got to also understand that Tesla and the car maker there and the EV markets, all the car makers, they use a lot of silver. So as the price of silver goes up, that's going to eat into their profit margins for sure. I don't think that's going to be too critical for them at this point. But if Elon Musk makes enough noise, I would not be surprised if the U.S. government comes in and tries to put some kind of controls over how much silver you could buy. Listen, it happened in 1929. It could happen again, except it was in the gold markets way back when, before any of us were born here. But yeah, Tesla, I would still be just maybe trading iron condors or maybe some diagonals on that. But I don't have any short-term forecasts on Tesla right now.
All right, no. Thanks. Our friend Mike says, Carvana finally, it took a while, but it was worth it. He scaled out. And TT is asking us if we can take a fresh look at CVNA, because this seems to be a trading stock for many. What do you think about Carvana?
I had a downside target from back here in December, and it's done a pretty good job. I mean, if you look back at Carvana, you can see the target levels that I've had in the past. These are the diagonal lines. So there's a target that hit. There's a target that hit right there with some other ones. Here's a downside target hit. This one finally hit. This one has hit. So looking at the charts, it's got 100% hit rate with regard to targets that have been set. Now, I wouldn't be touching that one with that big red candle today. I'd be waiting for that thing to calm down a little bit. I think it could go a little bit lower, at which time I would then take a look at maybe some of the options, and I'd do maybe some out-of-the-money put spreads. There's a lot of premium, like I said before. You could even go down here just to give you some ideas for this put spread traders. You could sell the 260, 240 for around $1 right there. That's about 5% that you'll get in 23 days, as long as it stays over these levels way down here, which I think is a high probability. But yeah, when you have a big red candle like that, you don't just jump in and try to catch that falling knife. That could be pretty dangerous. You got to let that one calm down a little bit. And for those who had a short position and took the profits, congratulations. That's you can't lose money taking profits, right? That's our motto. You can't lose money taking profits, and you certainly don't want to turn winners into losers. That's not a good thing at all. And I know a lot of people do that, by the way.
AJ, you talked about a falling knife. UNH was a really unique one back in 2025. We set up a position, and they had one of the most cascading drops that we've ever seen. Market Uniqueness is asking now if there's a dead cat bounce or if there's an opportunity to the upside in UNH right now.
Yeah, see, now this is one where on this day, on this red candle, just 2 days ago, right here, I put out a publication to our members, which basically talked about adding negative delta to the UNH spread. And I hope our members took that seriously and actually took action, because the day after it dropped, right? And so that UNH position is more or less a work in progress. Now, would I take a new position here? Perhaps. I would maybe scale in with a very light position, especially if we get a higher low, higher high tomorrow. And again, here's another one where the volatility is strong enough where you could maybe even go out into March and sell some credit put spreads down here for some decent gains. But I don't feel comfortable enough with the stock that's gapped down that far. I wouldn't feel comfortable of taking any new long positions, like outright long or directional trades, because you got to let the stock prove itself for a little while, making sure that it's going to hold these support levels, which support for this thing is down here around 240. So, I mean, there's a lot of stocks out there that are in much, much better shape technically. And I would say put the odds in your favor by going with the higher probability trades. And if you're joining us each and every week, we always come up with some trade ideas at least, and we look at stocks. We put some targets out there once in a while. And then, of course, from 6 to 7 every Wednesday, we go through the rapid fire. With that said, before I pass it back to you, tonight we're going to review what we covered last week. I'm very happy to report that in 5 trading days, 40% of the targets that we set last Wednesday, 40% of them have already hit the price targets. And so we're pretty consistent with that. And over time, we're still maintaining an 82.2% hit rate on targets for individual stocks that are submitted to us by our members on these webinars. So again, if you're interested in joining us, just come on over to StickyTrades and plug in. We got a 15-day trial that's absolutely free. No strings attached to that. All right, now coming down to the final minutes here. What do you got in that chat? We got, oh, look at that thing lighting up there, Mike.
Yeah, so Colin is interested in EOS. EOSE, please.
EOSE. All right, I do not have a position in this, but the technicals look very, very nice. That is very close to a bullish engulfing candle right here. You got a bounce off of that moving average. You got the oscillators moving back up here, at least on the CCI, and you got a very slight gap up here. I would say that's going to be your next resistance level. So if I were trading, I probably would take a very short-term long position, but I'd be selling right at that resistance, because once that gap fills, it's most likely going to start heading down. That's pretty much what we've been seeing in the past. After the stock pivots from resistance, it then turns and makes some hard sell-offs in a pretty dramatic way. I mean, here we hit the high around 20, and this down leg brought it down, about 30% from the high. Just in that short week and a half, the stock dropped, 30%. That's not exactly a good, secure investment stock, but it certainly makes for a nice trading candidate when you're looking for trades, especially on the option side, for sure.
Now, again, if we can squeak it in, I know you don't trade the VIX, but we use it as an indicator. Paul's asking for an update. I know, like I said, I know you don't trade it, but it's something that you use to kind of dictate trading.
Well, I do report on this every Thursday. Now that the weekly market report goes out on Thursday, right around 2 o'clock every Thursday now, which gives those who watch that YouTube video, gives them the rest of Thursday for a couple of hours, and then all of Friday. Now, last week I put an upside target that matched the target from the following week. You see, we did a 2-part forecast on the VIX back here, where I said we would go lower and then rally back up. And we did that almost immediately, hit that upside target, and then it sold off again. So these are bullish candles, by the way. This is an inverted hammer. So I am keeping my upside target on the VIX up here right around, what is that? It's going to be around 1844. Yeah, 1844. I think that will hit in the near-term future. Now, remember, before we go here, you have to understand that the VIX, for the most part, is inversely related to the S&P. So if I'm bullish on the VIX and the VIX is showing bullish signals, then you're going to be very protective in any long stocks that you're holding in the S&P 500. So I'm keeping the upside target there at 1844. And with that nod, we didn't run out of ticket symbols. We ran out of time. That's it. So I want to thank each and every one of you for watching here today live, dogs and all. And please make sure that you hit the like button and share this video with people that you know are in the market. We're doing our very best to educate folks on what's going on. I think it's best you turn off the major news outlets that are trying to influence you and your money, and stick to the charts and learn how to read them for yourself so that you can follow where the money is going live and make your decisions based on those technical signals. So with that, you have a good rest of the evening, and we'll talk to you next time. So long.